The Nikkei is lower right now as we speak. The Taiwanese index up 1%.
Expectations from the upcoming budget, which is scheduled for July 23, and budget session will be starting on July 22.
Big data point which markets were awaiting was the US jobs data, and that had the potential to move markets. Well, it did.
I think this quarter is seasonally weak quarter, right? As we have seen in past as well.
The first rates are going to come up. It's a flattish start, absolutely flattish start.
I think one thing that we have seen consistently play out over the last 2 years has been a big re-rating in the market across the board.
I think now we are in a quite comfortable situation as far as the rainfall is concerned across the country.
The markets per se are very, very quiet. Thanda, as you call it, after last week.
For the markets, as we've been pointing out, it's a down day. The Nifty is down 50 points. We have the mid-caps which are underperforming.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Okay, it's quiet out there, very, very quiet out there. 20 points lower is what the Nifty is trading down by. This is a Monday afternoon. We are coming to you live as always from the CNBC-TV18 Motilal Oswal studios. This is Closing Bell, last hour coming up. I'm Prashant. With me, my colleagues Reema and Nigel. Guys, good afternoon.
Hi, afternoon. The Nifty's moved in less than a 0.5% range.
Yeah.
And this was even the trading session on Friday. Very, very quiet, ranged, and another one.
Well, that's right. And in fact, I think HDFC Bank still is under some pressure and Reliance Industries is high. So I think both of them on the opposite ends of the spectrum, both those two heavyweights.
Yeah, cancelling each other out.
Yeah.
Because, it's not as if one is overpowering the effects of the other. And you're not very much to show for it as you sort of approach the last hour of trade. So the Nifty is at about 24,300 and it's lackluster for most parts. So flat to slightly low, not just the Nifty, you look at the Nifty Bank, you look at the mid-cap index, small-cap indices. Actually, broader market breadth has been negative since the morning. And it's almost about 2:1 in favor of declines. And it's been that way. Now, FMCG and PSU stocks, but not the banks. PSUs, but not the banks. Mostly railway and the infrastructure PSU names. Those are higher. FMCG is higher. Some business updates, etc. coming through. PSU banks are in a marked way lower. Metals are under some pressure. And I think you've got pharmaceuticals, which have done well recently, which are taking a little bit of pressure off. I think for the Nifty, as long as you hold the 24,300 mark, I think one can think about higher levels. Otherwise, you've got to start to look at some trailing stops. Maybe start with the 20 hourly averages, which the Nifty gets to before we see any further moves. So, but for now, we're holding above the 24,300 mark. Let's see how the session progresses. Reema.
Well, the small cap index is flat, though the mid cap index is down 0.4% after 3 days of gains. Last 3 trading sessions, the mid cap index was higher, so today it's retreated a bit. In PSUs, ONGC is having a fantastic session. Today, ONGC is the top gainer, a 4.5% up move. It rallied even on Friday. On Friday, we said, well, crude prices have gone up, but today crude prices have come down, and ONGC continues to be the top gainer on the Nifty. That's the 2-day chart on ONGC. Big move seen over there. And Wipro is seeing buying. While the rest of the IT stocks have started consolidating after last week's big gains, Wipro continues to see buying interest, and in the last 1 month, Wipro has seen a gain of close to about 12.5%. So that's a big mover. Reliance Industries is doing well. And in the FMCG basket, pulling up the big winners, ITC, HUL, Nestle, all these 3 stocks are up more than 1%.
All right. Well, let's get straight to the action then and find out how do you trade the final hour of trade today. Mitesh Thakkar is back with us. Hi, Mitesh. Good afternoon. Good to see you in. How would you trade the Nifty? Nifty is down close to around 15 points. And also tell us about the crucial level on HDFC Bank, because that stock is down 7% in a matter of 3 sessions.
So, Nigel, I think, I've been advocating this, that avoid trading the index. In fact, my view is that we might go sideways and consolidate. But as long as 24,120, 24,100 holds, I think we're not in danger of a big decline. So I think it will be a market which might just do some consolidation because we've had a good rally. Last few days, the market has continuously made higher highs, and since I think Friday, we have kind of gone into a sideways mode. So I think that mode might continue. On HDFC Bank per se, I think, the stock is now at support levels. I think today's low is a very important area, 1620 actually, but 1627 is today's low. So as long as it holds 1620, I think good chance that we'll see a bounce back to about levels of 1680, 1700. I'm not sure of a move beyond that because the fall was very steep and a vertical fall. So it'll need a lot of sideways action. So if somebody's stuck, I think, try to exit around 1700, 1680 zone or keep a stop below 1620. On the stock side, FMCG continues to be my favorite. So I have a buy on Colgate with a stop at 2920 and look for a target of 3020. And Divi's Lab is, I think, after a long time showing signs of a negative breakdown. So sell with a stop at 4505 and a target of 4350.
Thanks for that, Mitesh. We'll come to you for more. But life insurance companies are also in focus. They've reported their business updates for the month of June. Yash is here with details. Yash, take it away. What looks strong? What looks weak?
Well, Prashant, as far as the industry is concerned, the numbers have been very consistent for the last 1.5 years. And I'm saying this after a very, very long time. The start of the month for the month of June happens to be HDFC Life Insurance. Strong premium growth, strong APE, annualized premium equivalent growth. And that too over a very strong base of June 2023. So June premium up 8%. The base here is a growth of 33%. First quarter premium up 9%. Total APE has grown at 27%. The base growth was 28%. Retail APE growing at 34% over a base growth of 28%. This is followed by ICICI Prudential Life Insurance. Good growth over a strong base. June premium growing at 14%. Base is a growth of 23%. First quarter premium growing at 24%. Total APE growing at 13% over a base of 41%. Retail APE growing at 28%. Base of growth of 12%. Max Life Insurance, it's a moderate growth for the company in the month of June over a strong base. June premium is down 6% over a base growth of 45%. First quarter premium up 12%. Total APE growth of 18%. Retail APE growth of 22%. SBI Life Insurance, after some time of a good run-up, it's a weak month for that company over a weak base. So again, double whammy for SBI Life Insurance. June premium growing at 28%. The base growth was a fall of about 13%. First quarter growth of 13%. Total APE growing at 17%. Retail APE growing at 18%. Finally, LIC, June premium growing at 14%. First quarter up 28%. Total APE up 21%. Retail APE up 13%. So in the order, HDFC Life followed by ICICI Prudential Life are the two strongest companies for the month of June.
Okay, all right. Thanks a lot for that, Yash. Well, that's clearly the big stock that we're looking at. HDFC Life explains why. Once that quarterly update did come out, we saw the stock move from around that 600 to around 620 rupees. Deepan Mehta of Alexa Equities is with us. Hi, Deepan. Good afternoon and good to see you in. What do you make of this one? Yash clearly is indicating that, in fact, these numbers look much, much better. The growth on all fronts at around 620. Your view?
Yeah, good afternoon, Nigel, and thank you for having me on your show. I think spectacular numbers coming in from all the life insurance companies, especially HDFC. And these are great long-term businesses. I think good defensive businesses also. So if you are getting a bit skeptical about the market and expect a correction, then you may be overweight life insurance companies. But I saw the full show, the full report on insurance companies. And what caught my eye was LIC, that even on such a large base, they managed to grow 21%. And mind you, valuation-wise, it is very, very cheap. At the same time, it would have made stupendous gains in the stock market over the last year or so, all of which will get captured in the enterprise value. So as a measure of disclosure, of course, we and our clients are invested. But I think that's really a good opportunity for investors on a trading as well as long-term investment point of view. And in any case, PSUs have been the flavor of the market and are still so. So if you're looking for a good, solid PSU stock with good growth prospects on the trading side and investment side, then I would go with LIC. Although I think HDFC Life also is a great company and it's created a lot of wealth for investors and very well run. But I think the risk return favors LIC more than HDFC Life.
Got it. Let's talk about the railway stocks, because as the union budget nears, all the railway stocks are buzzing and seeing some very large price and volume action. Vivek joins in with more details. Vivek.
Well, that's right. The sole focus and the sole reason why we are looking at the railway stocks today has been the kind of stock price movement that we've seen, especially in the last month. And in fact, for the last year and a half, they have been in flavor. First, let's have a look at the 1 month moves. The three stocks that we are focusing on today are the railway, PSU, EPC companies. So that's RVNL, IRCON and RITES. RVNL in the last month has given returns of close to 46%, IRCON close to 28% and RITES close to 20%. In the last year, RVNL is up 4.5 times. IRCON is up almost 4 times and RITES is up 2 times, and this we are talking just in the last 12 months. So looking at the valuation, so what we've done is there aren't too many sell-side brokerages that actually cover this particular space. So the three stocks that we are looking at, that's RVNL, IRCON and RITES, all three of them have been covered by IDBI Cap. IDBI Cap, FY26 estimates, when you're looking at the EPS estimates over there, RVNL trades at 61 times FY26, price to earnings. IRCON trades at 32 times FY26 price to earnings, and RITES trades at 34 times FY26 price to earnings. So 2 years forward too, these stocks appear to be quite expensive. Let's have a look at the order books and the pure fundamentals of the company and what is the guidance that they've given as far as FY25 is concerned. RVNL currently sitting pretty at an order book of close to 85,000 crore. Company says that at the end of FY25, they should be at an order book of close to 1 lakh crore. However, remember, they largely work on low margin businesses. So what is RVNL saying? Order inflows for FY25 seen in the range of 20 to 25,000 crore. Revenue growth seen at just over 5% over FY25. PAT growth seen at 10 to 15% over FY24 levels of around 1,550 crore. IRCON sitting at an order book of 27,200 crore. Revenue growth seen flat for FY25. Order inflows of close to 10 to 15,000 crore. If that fructifies, FY26 revenue growth seems much better of close to 10%. EBITDA margins seen maintained at the FY24 levels of 7%, and PAT margins, again in the range of 7 to 7.5%. And lastly, coming to RITES, the company doesn't really give a top line guidance given the fact that they are largely focused on the bottom line. That's what the company says. Order book at 5,700 crore. Top line guidance they haven't given. EBITDA guidance, what the company says is that 25 to 27% is what they will continue to maintain. PAT margin guidance of close to 20%. Remember, FY24 PAT was close to 495 crores. So that's what they attempt to maintain as far as FY25 is concerned.
Okay, thank you very much for that comprehensive link. Dipan, any railway stock in your portfolio that you hold right now, or you did and now you've gotten out because of the run-up?
No, Rima, missed that one completely. It's all because of experience and baggage. These companies never really over the past 25, 30 years delivered any kind of decent returns. So generally avoided them. But, surprise, these stocks have really turned out to be great multi-baggers. And I don't think we have any of these stocks which we had. So from an investor's perspective, if you're holding these stocks, then great. You can take a pat on the back and remain invested. There is a solid bull market taking place in all these companies and defense PSUs as well. Where it'll take them, who knows? So remain invested, but these are moving trains. They're extremely expensive. And unless you're a trader who can get in, get out easily, you can trade in these stocks. But I'm not sure from a long-term investment perspective, 3 to 5 year horizon, these companies can repeat this kind of performance or even outperform the broader market indices. But that's my judgment. And I stand to be corrected if the performance is exceptionally good going forward.
Dipan, there is 10 days to go for the budget, right? From where we are now. Anything which you think we can see some asymmetrical moves? So there was, for example, on Friday, the NDA ally Chandrababu Naidu met the Prime Minister, met other ministers, etc. And reports say that he's basically demanded a package of about close to 1 lakh crores, largely towards building, the new capital of Amravati. It's been sort of, I think it's taken as a given that a package is coming for Andhra Pradesh, not just Andhra Pradesh, but for Bihar as well. Nitish Kumar, during that swearing in, before the swearing in, actually stood there at the dais with everybody around, said, well, this should be done now, a special package for Bihar. Not Bihar, but the Amravati project, and maybe if that gets kick-started, anything that comes to mind from a stock market perspective?
No, Prashant, I don't remember last year's budget. I don't know whether you remember. Even the interim budget, we don't really remember. It's all about, capital expenditure and higher allocation towards all the various schemes. So it'll be business as usual in this budget as well. It's more of a mission statement than actually a budget. But yes, I think if you're going to see enhanced construction activity in Andhra Pradesh and Bihar, then certainly the engineering construction companies, companies engaged in road construction, airports, railways, infrastructure projects, especially South-based companies may benefit in terms of higher order flows once the funds actually flow to the state government. And also, I think real estate companies, especially South-based real estate companies, they may also benefit because of higher better opportunities and higher prices in around that region. But these are micro plays, and specifically on the budget, I think there's really nothing that investors should bet on and invest from a point of view of that this particular company will get a benefit from this budget. I don't think so per se. Last few budgets haven't really brought out any significant winners, which you could have predicted prior to the budget or because of the budget. So just need to keep that in mind, that it may turn out to be a non-event. A lot of positive statements will come through, but I don't think it's going to be very specifically causing a further buying trigger for the stock market as a whole or any specific stocks.
Well, the only sector I can think of. But there may be specific things, right? PLI announcement for newer sectors, but who knows? Housing perhaps is a theme which did well immediately after the election result. I mean, housing did quite well, and then it all tapered off a little bit. I don't know if you, and of course, I mean, valuations there are not very expensive. So that's the starting point. Any thoughts?
No, I think that housing finance companies, there's an opportunity over there, especially low-cost housing. And especially South-based companies, one which comes to mind is Repco Home Finance and some of the other companies over there. But real estate companies, I think, are fairly valued. No doubt, I think, their actual net asset value, enterprise value keeps on growing every quarter because of new projects which they are doing and increased momentum and higher sale value per square feet. So a lot of positive trends going for real estate companies. But look, these stocks also have generated superlative returns. There are a few multi-baggers over there as well. Again, a moving train. If you're invested, remain invested. But from a fresh investment perspective, I think wait for a 25-30% type of a correction.
What about Bajaj Finance? I know you've liked it in the past, and I think you own it in your portfolio, and you entered in at much, much lower levels. But after the strong Q1 updates, we saw the stock split. And the stock is still not back to its 52-week highs that it hit in October of last year. I think that was close to about 81, 8,200. And now the stock is down to about, I think it's close to, I think, about 7,000 thereabout. What's ailing Bajaj Finance other than the valuations? And what is it that the street didn't like in the Q1 updates?
That I don't know what the street didn't like. But I'll tell you one thing, that a lot of investors have shifted away from Bajaj Finance to Jio Financial, and they feel that Jio Finance has got a far better growth trajectory, and they will eventually take market share from Bajaj Finance and some of the other NBFCs. They are competing in several financial products. They are competing head to head, and investors perceive that Reliance perhaps may have an edge because of its resources, because of its execution and its brand. I do not completely agree with that particular thesis. I do feel that Bajaj Finance is in a league of its own, and it will continue to grow at that 20% thereabout for next several years. And even if PEs don't get re-rated upwards, this is one company which can give a compound 15-17% type of growth rate at the bottom line, and similar returns can be expected in the stock price as well. So we remain fully invested and committed to Bajaj Finance. As you said, yes, it's a company in which we and our clients are invested. It's amongst the part of our core holdings. And it's just a matter of time before the new highs are created over here. It is a bit of an overrun stock also. That also, acts as a bit of a dampener. But let the numbers come through for this quarter and the next few quarters, and you will find the stock price to start moving in line with earnings growth.
Okay, all right. Dipan, I wanted to ask you about IREDA, IREDA. Just, I think, around 7 days ago, the stock was at around 200 rupees. We had the management, and they were talking about bright prospects. They also said there could be a follow-through issue in the second half of this fiscal. The stock in 7 days is up 25%. At 200 rupees, it wasn't cheap, but it's still at around 245 rupees. What's your view on this one? There is that hope that in the budget, it'll get included under that section which which will give some kind of tax relief for all those that are investing in the bonds, both for HUDCO as well as IRDA. And the management seemed very, very confident as well. What would you do with both these two names? They've seen a big, big run in the last 10 days.
So I think one should remain invested. Both these companies, the shareholding pattern is extremely, I would say, tight and low floating stock. And even if existing investors, especially institutional investors, look to add even a little bit in their portfolio because of fresh inflows, these stocks tend to do well. But within the entire PSU, NBFC space, I still prefer PFC and REC. I think from a valuation perspective, they are still attractive and there is scope for Ps to get re-rated upwards. Look, these companies haven't really done well in the past 5-10 years in terms of growth rates, but next few years could be completely different and you could expect 15-17% type of top line, bottom line growth rate. And NPAs have never been a problem for these companies because typically they lend to the PSUs or the government departments where there's a kind of a sovereign guarantee. So from that point of view, rather than IRDA or IRFC, I'd like to go with PFC and REC. I think risk return profile certainly better over there.
We had Ashish Gupta this morning, who kind of echoed that same view. He was, of course, in his earlier avatar, a financials analyst, and he said, well, didn't name names, but essentially likes those names much more. I mean, the RECs and the PFCs of the world, not very expensive as compared to some of the others in that space, which, of course, are more pricier. Just a few sort of stocks here, but the 1,500-1,600 stocks, 1,600 stocks are lower. And you got about 950 stocks which are higher at this point in time. So market breadth is clearly skewed on the downside, and you got lots of names on the downside. Exicom is down 6. If you can just pull some of these names up, apart from of course the business updates, AU Bank etc., which have been down. Elecon Engineering is down 7%. Huge volumes. Paras Defense is down 5%. ITD Cementation, we discussed this on Friday. It's down another 7 after Friday's 15% odd sell-off. Exicom is down 6%. Shakti Pump, which had a one-way rally, is down 5%. Basically, it's gone up every day, clockwork 5% on the way up. Today it's on the other side. Radico is down about 4%, 1643 or so on Radico. What else? Sharda, Motor, and a few others here. But then volumes start to thin out. If you look at if you attach volume as a weight to which way the market is going, it is still with gainers because maximum lots and lots of volume on what is going up really. Midhani, which is Mishra Dhatu, is up 5.5%. That's essentially a specialized alloy maker and they supply to defense companies. As a PSU, that's up 5 1/3. Some of these REC PFCs we mentioned. Paytm has been jumping 8-9% today, 472. I mentioned HBL Power in the morning. Metro Brands has come off a little bit from the highs, but still 6% higher. There is Eveready Industries, which is up 13-14%. Anantraj is another one which is looking up. Small name, BL Kashyap, contractor based out of Delhi, 10% higher, 103 on BL Kashyap. Huge volumes. Alembic Limited is up about 8% and so on and so forth. And I'm barely scratching the surface here with what's going on. Deepan, any thoughts? Paytm, with the move that we're seeing right now. There was an interview, Money Control conducted an interview with the Vijay Shekhar Sharma. He said, I mean, of course, he essentially said that I'd like to turn this into a $100 billion company, kind of acknowledging the challenges which he's faced with the regulator, etc., etc. But that's the last I saw something newsy on Paytm, the latest rather. Your thoughts?
No, Prashant, I think the stock is getting interesting and it's gone through a lot of upheaval last 2-3 years or so rather since listing. And whatever could go wrong has gone wrong. And now I think the strategy shifted more and more towards distribution of financial products. And that I think is very positive because the margins over there are exceptionally good. It's a low risk business. And it clearly rides the key strength of Paytm, which is having so many merchants and so many consumers on their platform. And I think the worst is over in terms of whatever subscribers they had lost, that is over and done with. And now they're getting back into in rising subscribers and increased users as well. I don't think the Paytm brand has taken as much of a damage because of the regulatory action as well. So from many angles, it looks interesting. It's a very aggressive management. And I think what they have in terms of actual users is quite phenomenal. So long as they can rein in their ambition and just stick to knitting, which is financial distribution of financial products and loan products and provide payment gateway, I think they are fine. They'll continue to grow quarter after quarter, year after year, and at some point of time may come solidly into the black, and that would take the stock price higher and higher. So don't write off this company. Keep tracking it, keep looking at its quarterly updates, and at some point of time, it will be in a sweet spot where there'll be good earnings visibility, and that's time to take the plunge.
Okay, thank you very much for that. By the way, GAIL is moving up quite smartly. Pull up that intraday chart of GAIL. GAIL is up close to about 3% odd. And in the PSU basket, you also have RCF moving up and EIL. These are some stocks which are spiking up. Get into a break. Thank you very much, Dipan, for joining in. We'll connect with Amit Jeswani from Stallion Asset on the other side.
Okay, welcome back. 30 points lower on the Nifty. We're at 24,292 at this stage, and looking pretty flattish all over. Broader markets also sulking. But as I read out that long list of volume-led gainers, just bubbling under the surface. The surface is a bit quiet. That's pretty much it. We have Amit Jeswani who is joining us now. He's founder and chief investment officer at Stallion Asset. Amit, welcome back on the program. Thank you very much for your time. Prashant this side. Before we go into sort of your view on the market, etc., with the budget around the corner, I want to just attack one sector. This is data centers. A lot of excitement around it, and people are thinking about what is the best way to get exposure. So last week, there was Castrol, which saw a very large move. And we were thinking about whether, it's higher lubricant sales. And someone said, well, it's data centers. Because, these data centers need coolant. And BP, Castrol's parent, makes coolants. And they're going to sort of get that product here, etc. We're trying to reach the management of Castrol. We'll have them and we'll put these questions to them. But fair bit of excitement. I saw a report around this. I remember you telling us that you have exposure to one company in that space called NetWeb Technologies. So if you want to just talk us through how your thoughts on this opportunity have evolved and what do you make of it, and whether you found other ways to play this.
Good afternoon, Prashant. Thank you so much for having me on your show. So whatever I speak about, these are not stock ideas. These are just for education purposes. I'm a PM, like Stallion Asset. I'm a PMS company. We keep buying, selling stocks all the time. We keep trading in, trading out. We do a lot of up and down. So these are not recommendations at all. But coming to your point, Prashant, yes, we do have exposure towards data center. But see, Prashant, the thing is that stocks have moved up 50-70% in a quarter. So you might want to just so this is a theme which is getting hot by every passing day. If you see, this happened because of Nvidia. So whenever there's a global trend and stocks in the global market, like today, the largest company in the world is probably Microsoft or Nvidia. They just keep going up and down. But there is a large bet that investors have made towards AI, data centers, and anything which requires a lot of calculations. And there are ways to play it. And there is Anant Raj, who's building these data centers. There is NetWeb, who's a software plus hardware provider. And then there are newer themes like Astral that you said that are coming. So investors, so nobody knows what these businesses will look like a few years from today. People typically in these high growth businesses, you take things six months, you take a view of every 5-6 months. And then you think that what the next 6 months or 8 months, you cannot have a 10-year view in these kind of stocks because nobody knows. There cannot be a 10-year-old AI company because AI was not there 10 years ago. So these will be new company in all these spaces. They will have explosive growth. And till the time they have explosive growth, typically the markets will keep bidding them higher. But yes, you have to just control your weights because the valuations are extremely high. So make sure that you're controlling your weights. Like if your weight is 3% and the stock has run up 50%, you may want to cut it down again to 3%. This is what we do. I'm just telling you what we at Stallion do for how we play hyperscalers because the growth is just too high in these kind of companies.
I remember, Amit, you're telling us that you generally take your large positions during the earnings season to spot those companies where you are seeing explosive growth. But tell us, this to the data center question, you own Anantraj and NetWeb in your portfolio as the companies with exposure.
We don't have Anantraj in our portfolio.
Okay. Got it. So just now going back to that point, right? Earnings season is when you assess companies where you are seeing growth momentum and what the companies have to say in the conference call. So in Q4, which were the companies where you've taken positions in stocks? Do you want to tell us a little bit about that?
So I had already told this, and these stocks would have already run up 50%. So we had taken old, I'm telling you, these are now 1 quarter old. 1 quarter looks like a long time these days because stocks melt up. So we taken position in that one data center play. We had taken one mobile monopoly, like manufacturing monopoly, which is getting created. Sorry, today I'm not taking stock names because my compliance team has not allowed me to take today's stock names. So one mobile manufacturing, we had taken one AC manufacturing company. That has also gone up 50%. So it's been a super quarter for us, to be honest. There is nothing to complain. The AC manufacturing company, the summer kept getting better, and AC manufacturing. Just let's wait for the earnings season. There are conference calls where large cap companies like the Pepsi maker of India has said that they are running at full capacity utilization. The summer has been a rocking summer, but overall, if you ask me, Rimaji, the earning updates which have come till now in Q4, they've been of Q1, they've been horrible. Nothing short of horrible. I have not seen HDFC negative growth of advances. Titan doing 8%, 9%. I'm just telling you data. These are not opinions. I'm just telling you facts. But Titan doing 8% growth. It is it looks like a very poor start to update season. This is not earnings season, but update season is extremely poor as of now, and I'm getting scared. And this is probably the reason why automatically, so we at Stallion, we are mostly 100% invested, but we might have come to near 10% cash holdings. And it has happened automatically. For us, cash is not a position, it's an outcome. If we are not getting newer ideas and our old ideas, we are not getting the same risk reward that we need, we automatically increase our cash positions. And as of today, we have cash positions of around 10% in the fund. And this is high for us.
All right, Amit, since you briefly mentioned about the quarterly updates coming in from Titan as well as HDFC Bank, well, let's get in Mangalam. He'll just give us a quick read-through on how Titan did. I think we have okay, we'll go to him in just a bit. Amit, the last time you joined us, you had mentioned a couple of sectors where you had a good amount of exposure. One was, I think, the capital markets place, which, if I remember correctly, it's around 10% of your total mix. Now, the street believes there are restrictions coming and there are some moves in that direction. Are you trimming your positions over there? That's the first part. And Polycab, I don't know how we could term it, the largest cable and wires player, so your compliance team is fairly comfortable. You all had 9.5 to 10% out there. The promoter entity came and sold a little bit. So on both these two, have you skimmed down on the positions?
On wires and cables, yes, we've trimmed our position size. So we got a decent, we sold it at better prices than what the promoters did. So, but we've trimmed, we still have a large position. We still have a decent size position, which is there. See, in building materials, the numbers which have come out till now, the largest structural steel player has grown at 9%. In the AGM of the largest plastic molding manufacturing company in the country, has said that they have said in the AGM that they've grown at 21% this quarter. So growth is going to be a very scarce element this quarter. I can tell you, Nigel, we keep finding growth. We are all day, we just keep thinking that what is that, and export data. We look at everything which is there, but we are not finding very many free hits or full tosses that because we have so much data. We have access to export data, website views. We just track everything which is possible. And I can tell you that even the largest beauty player which came with numbers yesterday, they just did a large investor large investor conference a few weeks before today. The numbers were like 22% growth is for us extremely weak, because 22 is not to our standards. So we're finding it tougher to get high growth of 30-35%. The summer players will do very well this quarter. Capital market, to your second question, we have the largest commodity exchange in the country, and we have one wealth management player. If you look at the largest, sorry, I'm not taking names, but the largest wealth management player, that is at 45p. The middle one is at 80p, and the player that we hold is at 25p multiple. And it's an MNC, the one that we hold. So hopefully we will get better multiples. We are just praying, to be honest, right now. But stocks have not made my capital market stocks. See, one way of me assessing that I'm wrong or right is both the capital market stocks that I have have not making new highs after Modi ji has come in. So both of them are lacking the market after 4 June. If you look at a stock exchange company, which is listed, the only stock exchange, that has fallen 30%. So on the 23rd of July, when the budget comes and something is not horribly wrong in the budget, then there will be light. But wealth management companies will not get impacted regardless. It's only on option trading.
Yeah.
And that too, that 1 hour weekly option, which the commodity company doesn't do any which ways. And the more important part is that public data of exchanges, which is there, shows that there is a 60-65% growth, which can happen in revenues of the largest commodity exchange this quarter. So 60-65% revenue, it's very tough to get growth. So that is why we are not selling the largest commodity exchange company that we have.
Okay, MCX. And you held Novama, I remember. Amit, is that what you were talking about?
Yeah, we have that in our portfolio. But that has grown 51% last quarter also. And this quarter, if you compare Novama to all the peers, the valuations are half of the other players in the market.
You said there's an MNC wealth management player in your portfolio, or did we get that wrong?
Novama is owned by PAG. So
so you okay, all right. Got it.
So it's not owned by Indian promoters anymore. Indian promoters, there's a rumor in the market that they might exit. So I don't know the rumors.
Okay. Now, what about Angel, which you owned? You still own it?
No, we sold 2 quarters back. I told you.
Okay, that's Europe. Yeah.
We cannot take such large drawdowns, Prashant. Our ability to take drawdowns is we are very poor with our drawdowns management, but we sold Angel out of our portfolio, I think 1-2 quarters ago. But
so if you're not finding, you're saying, you are tracking everything and you're finding it hard, right, to find ideas now. I mean, that's a challenge, right? How does one deal with it? I mean, because money is coming in, so what do?
Liquidity तुझे गिरने नहीं देगी, earning तुझे बढ़ने नहीं देगी. That is the state of market right now. Because we are also getting decent liquidity. But I need alpha. See, my alpha expectations is not like most people dream of 2, 3, 4% alphas. At least we dream very large of our alpha. So when I say I'm not getting full tosses, that means I might still get 20, 25% CAGR opportunities, and I might say that no, I want more. Because see, we are going through a hyper greed stage, and my greeds have also changed. Right now, if someone tells me 20% a year, my analyst comes and pitches me a 25% returns, I may not like it as much because my habits have not been like the 20-25% CAGR for last 1-2 years. So that is probably the reason why I'm like, it can be and this will be for all fund managers, not just me, that our return expectations have now moved to 50% in 1 year. Like I'm just telling you, and this is only bull market euphoria, I'm telling you, which is there in my mind also, that you want higher return expectations. And if the market stops giving us return, our return expectations will also come down, and we'll be happy again with 20% CAGR. But right now, the stage of the markets that we are in, you want full tosses. And what I'm saying is we are not getting full tosses. When I say full tosses, means you're getting 50, 70, 80%. See, in bull market, you have to change your net worth. And if bull markets, your alphas are 2% or 1% or 3%, then you will very tough for you to get rich. But you also need downside protection. So you want highest returns, but also the lowest kind of risk. But if you don't change your net worth in bull markets, and these seasons don't come. See, if you look at all great investors, they have made all their fortunes in bull market. It's only one bull market that changes your entire lifestyle. What Warren Buffett said, you have to get rich only once. So that is what bull market does. And we are also trying to be greedy, but also have like risk at the back of our head. But right now, I want higher CAGR returns, which we'll do as good as market if we don't get this like new alphas this quarter. But the whole idea is in this earnings season, that is where we do the largest churn, right? And that is where we get liquidity also. So let's see if this earnings season goes well. I'll be back to 10% alpha a quarter.
You know, as they say, market ने हम सबकी आदतें बिगाड़ दी हैं, right? But when your analyst next time comes and pitches a 25 CAGR idea, please send him to us. if you didn't take him or her up on the idea, but good conversation as always, Amit, and I think makes sense, to think about it slightly, in a philosophical way as well. That in boom periods, and we certainly are in a boom period, you got to think slightly bigger. But of course, also, in a risk-adjusted way as well. So you don't want to really blow up if things start to go sour, which at this stage doesn't look like that is the case. Thank you very much, Amit, for joining us with that perspective. Well, let's focus on consumer companies, and let's focus on Titan, which actually is lower. Amit was talking about that 8% growth and why he wasn't impressed. Let's get into the details. There was also details from the FMCG space, Dabur and Marico. Mangalam is here with all of that. Mangalam.
Well, for Titan, the thing was that it's an 8% growth that the company reported. And as we speak, we're also getting the update on Senco, where the retail sales grew by about 11%, same-store sales growth coming in a lot higher, whereas they did Akshaya Tritiya growth of almost 21%. Importantly, if you compare this with Kalyan Jewellers, which showed a 29% growth, that one stands head and shoulders above everyone else. And as a result of which, people are looking at that versus, say, something like a Titan. Senco as well, at a much lower base, grew faster than Titan. And as a result of which, Kalyan Jewellers has spiked slightly higher as against Titan, which is currently lower in today's trading session. So, it was high gold prices, lower wedding days, and weak sentiment that impacted demand for Titan. The buyer growth was also in low single digits. Studded growth was moderately lower in comparison. That impacts their margins as well, as a result of which there were a couple of downgrades. JP Morgan, for instance, downgraded the stock to neutral, lowered their EPS estimates by 5 to 7%. ICICI Securities as well lowered their EPS estimates by 5 to 7%, cut the target price from 3,400 to 3,200 as well. And Goldman Sachs as well as Morgan Stanley, both of them expressing concern about this quarter. So, Titan was not growing well on a high base on account of weak macros, but at a time when competitors who are priced much lower in terms of valuations growing much faster, the street saw maybe a case for a bit of a shift.
Mangalam, very quickly, if you could tell us, Dabur and Marico, they are rejoicing in trade though. A couple of quick points, why they're doing well?
Well, why they're doing well is because both of them saw sequential improvement in volume growth, and they see further improvement down the road as well. So those are factors which are doing well for them. Additionally, even as there has been some green shoots of recovery in rural and volume growth has come by, there hasn't been much letdown in terms of input prices as well. Both the companies have seen their operating profits improve higher than revenue, which implies that margins would improve for both of them as well. And that explains why Dabur is higher in today's trading session alongside Marico. Marico slightly higher because over the last 1 month, Marico has actually underperformed Dabur.
All right, Mangalam, thank you very much for that. So that is consumer slash FMCG in focus, tightened down, the others doing well. We'll take a break. We are back with some short-term trading ideas with the technical experts on the other side. Stay tuned.
Well, SpiceJet is a stock in focus as they've not deposited Provident Fund contribution towards its employees for over 2.5 years. We have Madhya who's joining in to fill us in with further details on that front. Madhya, take it away.
Well, Nigel, not depositing mandatory statutory dues is a clear sign that the airline is struggling with cash. We have been reporting on how the airline has been defaulting on various payments. CNBC-TV18 had also sought a response from SpiceJet on 28th May on the delay in PF deposits, and the airline in its reply had said that it is regularly clearing the dues with a lag of few months. But now, according to the Employees Provident Fund Organization's reply to CNBC-TV18's RTI query, SpiceJet has not deposited dues since January 2022. EPFO said the last deposition period of PF contribution by the establishment is for the wage period January 2022 in respect of 11,581 employees. The Provident Fund body also said that it has sent notices along with summons under Section 7A of the EPF Act and MP Act 1952 against the establishment regarding non-deposition of PF contribution. Now, in March this year, the EPFO had warned companies of damages if there is non-compliance in PF deposits. the employer will have to pay an interest of 25% for a default of more than 6 months. Now remember, on the 7th of June, CNBC TV18, upon receiving a confirmation from the Airport Authority of India, had reported that SpiceJet is operating on cash and carry mode at all its airports in India. The airline is also facing various litigations regarding non-payment to lessors in different courts. So yes, signs of severe liquidity crunch in the airline. CNBC TV18 has sent a query to SpiceJet regarding the EPFO payments. The airline is yet to respond to a query.
Okay, thank you very much for that. Mitesh is now with us for a few BTST calls. Mitesh, what has caught your attention in the last 30 minutes and what would the calls be?
Yeah. So I have, in fact, one buy and one sell. I think Gas Authority is closing with good strength. So GAIL can be a BTST with a stop at 227.5 and look for a target of roughly around 235 here. While on the selling side is the two-wheeler name, I think, I got it wrong. Just give me a minute. This got stuck, yeah. Sorry. We'll take a BTST on GMR Infra with a stop at 97.90 and a target of 102.
Okay, all right. BTST on GMR. Yeah, all right. That's the one that's moving at large volumes at the high point of the day. Thanks a lot for that, Mitesh. For the time being, we'll slip into a short break, come back. More market talk lined up on the other side.
Welcome back. The Nifty's climbed above 24,300. HCL Tech has started moving in the IT pack. Through the course of the day, it was only Wipro. But now HCL Tech too has a gain of 1%. And in the private sector banking names, Kotak Mahindra Bank has come in for some buying interest. Let's get you some market opinion. We're just counting down to the close of today's day. Axis Mutual Fund CIO Ashish Gupta shared his view on the market trends. He believes that market multiples are elevated. Listen in to an excerpt from that conversation.
One thing that we have seen consistently play out over the last 2 years has been a big re-rating in the market across the board. I think from here on, our focus is primarily on earnings. We believe stock performance will actually track more closely the earnings and the earnings delivery that come through, because the valuation gaps in the market have narrowed down. It is kind of very important to be in companies, in sectors where one can be confident about earnings, both in the short term as well as medium terms. Because really the market multiples today are more elevated than most times in history. Broader consumption still has not picked up, and expectation is as government spending picks up, you will see a broader revival in the economy. Very few pockets of value that is left in the market. I think the financial sector is one of them. It is one of the few sectors that is trading at multiples lower than historic trading multiples. Most other sectors today are trading 1 to 2 standard deviations higher than historic trading multiples. So I think financial is one sector. I think what has been weighing on the sector, and particularly banks, is that earnings growth is expected to slow down this year. And deposit growth in particular has been soft.
Just take a look at the markets. We've moved into the green, so we've recovered this 30-point loss that we saw. HCL Tech is one of the big movers, but that doesn't have a very large weight on the index. ITC, that's come back, and that's come back strongly. It explains why the index has seen a good recovery, currently at around 445 rupees. Anand Tandon joins us on the show. Hi, Anand. Good afternoon. What about ITC? You know, the street was bracing by for that corporate announcement. After that, we saw the stock just consolidate in that range, 420 to 440. It appears last few sessions there has been delivery-based buying and it's been moving up. Your view at 445?
Remains among the cheapest stocks around. And after the split, I guess you will get a cleaner or more easily analyzable or attributable numbers coming through various of the companies that will form. I would expect that, you know, it's not going to be something which will set the house on fire, but at the same time, it's a good defensive play, and the irrespective of what happens in the budget, etc., you would expect to see that the margins, especially in the cigarette business, will continue to do reasonably well. So I don't see any reason why one should be having any fears about ITC in general.
Anand, afternoon. Thank you for joining in. So what catches your fancy? Because you've always been wary of stocks with premium valuations where expectations have run up too much. So currently, where are you comfortable? Any stocks, sectors, themes that you'd like to highlight?
Nothing that is new. The same old themes continue to do reasonably well in terms of valuations, which means that they haven't performed that well in terms of the market, which is essentially the financials. I think among the large sectors, that's the one sector that continues to remain relatively cheap. There are issues, no doubt, around the fact that deposit growths have been slow. Credit growth has been high. Most of the frontline companies, or many of the frontline companies, have credit deposit ratios which are beyond regulatory pleasure, and therefore there is some pressure on reducing the book size. But with all of that, the fact of the matter is that, you know, that is probably one of the sectors that is still able to show some growth without necessarily getting into a territory in terms of valuations which are mind-blowing.
You know, Anand, from your where you stay, there was news on Friday, and I was asking this to someone earlier, that Mr. Chandrababu Naidu is asking for a big package, which most likely he will get to build that capital. not ideas to play. I mean, markets are smart. From the time that this new government came to power, a lot of stocks have run up, etc. But any thoughts around this, if this were really to become a reality? Because, people are factoring it and it'll come, not just for Andhra, but for Bihar as well. A package.
Prashant, I think the package will not come in the way that most people think. First of all, there is a difference between Telangana and Andhra. Where I stay in Hyderabad is now Telangana. And to my view, Telangana is now fairly fairly tight spot as far as their own financials are concerned. So it's been a state which has done exceedingly well in terms of growth for the last several years, because after the split, they got all the revenues and half the cost, and consequently were able to spend a lot of money in terms of various projects. That is now over, and now it's a very heavily leveraged balance sheet. So Telangana is not doing much. As far as Andhra is concerned, there is without doubt money that will come from the center. But I think the way it will come is typically in the form of some infrastructure projects, which the center will take up instead of the state. There is the chances that you will get something like a special package is very unlikely, for the simple reason that that will create a problem for all other states, which will also go out in demand. And two, the amounts are not very meaningful. If you take Telangana as an example, the total amount of central government-sponsored project, the amount of money that the state gets is 6,000 crores. And if it goes from being special status, it will go up to 9,000 crores. That means 3,000 crores additional. That's not going to fill anybody's stomach. So, you will, on the other hand, one, greater outer ring road, for example, is going to cost you 14,000 crores, which the center is willing to do. So I think that's the kind of thing. So the best way to play it would be to have infrastructure. After all, Amravati, all it needs is a few, some road around that place for the valuation of Amravati land to go through the roof.
Anand, thank you very much for joining in. Just about 2 minutes left for markets to close. The Nifty is closing in the green above 24,300. So managing to eke out a little bit of a gain, up about 13 points after being down nearly 80 points at the session lows. The mid-cap index, though, ends in the red. The advanced decline ratio negative, 2:3 in terms of a ratio between the stocks gaining versus the stocks losing. Sectorally, on the way up, FMCG did well, 1.5% on the back of positive updates from Dabur Marico calling out a rural recovery, pickup in demand quarter on quarter. CPSC index, the Nifty CPSC index up 1.3%. Names like ONGC, railway stocks higher in trade, but not the PSU banking index. The Nifty PSU banking index down 1.5% as we got disappointing updates from Bank of Baroda, Union Bank and others. And IT too managed to close up in the green, and some buying emerged in names like HCL Tech, Wipro towards the end. And Reliance Industries was also a big contributor.
Well, railway-related names, Rima, as you mentioned it well, RVNL, IRCON, Texmaco Rail, all of them up between 5 to 15%. And fertilizer-related plays as well did do well. RCF, NFL, both of them up more than 10%. We had highlighted at around 155 rupees a month or so ago that RCF was seeing a fair amount of delivery-based buying. IRDA continues in one direction, which is northward. That stock was up close to around 8%. On the flip side, you had stocks like Patel Engineering that were down close to around 10%. Because of the untimely death of its promoter, Mr. Rupin Patel. So that's why that stock was down 10%. You had, quarterly updates that came in from Bank of Baroda. So that stock was down close to around 4%. And Vodafone Idea went all the way to around 18, but it's quickly pulled back to around 16.5. So some kind of profit taking from the top is what we're seeing on that one as well. For the time being, though, we'll wrap up on this edition of Closing Bell. You stay with us. Markets Forward comes up next.